Okay, so welcome back to parts. I lost count, but probably going to go over some of the flashcards that I ended up making for the Navigating Big Deck Crises and also Damodaran. So I think let's just get right to it. Okay, what is going on in the Red Sea? So I think there's some Houthi rebels that are Actually, do you want to take this? Because I'm probably going to be talking a lot. I don't want to distract you. You can take my chair, because I'm probably going to go downstairs since I'm going to be talking a little bit. I don't want to distract you.
I don't care. I'm not doing anything important.
You sure?
Yeah.
Okay. Okay, so in the Red Sea then, what's going on right now as of 2023, so December 20th, I think what had happened was the US is trying to maybe launch a military campaign against the Houthi rebels because a lot of ships that are carrying cargo along the Red Sea are being attacked by these rebels. And I think the article mentioned them being backed by some Iranian governments or Iranian military, something along those lines. Yemen's Iranian-backed rebels are attacking commercial ships that travel on the Red Sea. The U.S. is planning to launch a military strike against them to protect the trade in that region. This could lead to less economic/shipping activity and possible price increases due to rerouting. Okay. What is the current states of the What is the current state of the housing market as of the publishing date below, and what is the outlook for the upcoming 2024 year? So, in this article, I think what it talked about was that the effects of work from home have pretty much wrecked the office market. And I think it mentioned a bunch of companies that track different types of metrics in order to figure out what exactly is the trend in terms of how people are working now, where they're working. And it seems like the numbers of people that are still working from home as opposed to working in the office is very low. It was very high compared to pre-pandemic levels. So more people are working at home and have some type of hybrid schedule. So this in a whole is making the office market, specifically office and commercial real estate market, really tough, as a lot of the tenants are choosing to move to places that are cheaper and also less spacious compared to before. And I think a lot of the leases are expiring in 2024, or there's a good amount of leases that are expiring in 2024, and it's likely that a good majority of the people that are having expired leases are going to not end up releasing at the same place. Occupancy rates are not pre-pandemic, meaning that people are not returning back to office, and most office spaces are full capacity. More than half of the companies in the U.S. allow employees to work from home some days a week, and around 50 to 60% of them actually return to office. Office vacancy rates are higher than 10%, and are forecasted to grow to 17%. Landlords are facing increasing pressures due to the reduction in rent income, high interest rates, and a shifting work culture that is causing higher defaults. These landlords have the option to sell a property at office vacancy 10%. Landlords are facing increasing pressures due to a reduction in rent income, high interest rates, and a shifting of work culture that is causing higher defaults. These landlords have the option to sell property at deeply discounted prices or give them back to the creditors. Okay. What is the trend among renters versus homeowners observed in the by the WSJ? So I think this one is, so this is the article, The Rise of Forever Renters, right? So there is a problem in the commercial real estate market, especially with office properties. But this article by Rachel Wolf and Veronica, I think Dagger, so they were doing some research and analysis and found that a lot of people, especially I would say millennials and I guess a lot of millennials, especially millennials, are choosing to rent as opposed to purchasing or buying homes. And this, they claim to be because of they claim that this is due to a few reasons. One of them is the fact that right now home prices are really high and also mortgage rates are also really high. So it's expensive for people to actually to actually purchase homes. Another reason why they say is because renting gives families more flexibility to spend in other areas that they may want to spend in, whether it's leisure, travel, maybe renovating their existing apartments. They gave a few anecdotal stories about some families doing that. So I think the big reasons why are the first two I said, because it is a really costly investment to buy a home right now, and for some people it's not appealing. But there's also a trend in the sense that even higher income people, a higher percentage of higher income people are choosing to rent versus buying a house. And so that's an interesting observation to make. Who are the successors of Berkshire Hathaway and what are their backgrounds? Okay, so in this article, I think it was a specific article about Greg Abel. So he was about to be the next CEO of Berkshire Hathaway for its non-insurance operations. He has an interesting background in the sense that I think he went to school and was born in Canada, and then he actually started out as an accountant at PwC and then worked his way over to Cal Energy, I think one of the clients that he had at PwC. And so at Cal Energy, he seemed to do some really good work on valuations and advisory, maybe also some M&A stuff. I think that's actually how he ended up becoming the chairman of, I think maybe not chairman, but CEO of Cal Energy. He was in charge of managing the acquisition of some type of, I think, energy company in the United Kingdom or some European country, where he ended up actually having to stay in for a few days, not for a few days, for a few years, maybe a few months, to see the transaction through and merge the two companies together. But I think he ended up working for Berkshire Hathaway after Warren Buffett bought the Cal Energy business and then ended up creating the Berkshire Energy and then the Berkshire Energy business. Yeah, that's interesting. So he's in charge of that. There's also Ajit Jain, who's in charge of the insurance business, and then Todd Combs and Ted Welshler, I think Weschler, who are in charge of the portfolio or the investment of Berkshire Hathaway. Peppers of Northern Electric through and became chairman of a company which was eventually bought out by Berkshire Hathaway. And then Berkshire, Sokol, and Abel spent billions on acquisitions and even more in capital investments. Today's headlines from the markets: WSJ 10 point December 23rd, 2023. Yeah, this is going to be hard. So I think in December 23rd, 2023, so that would have been, today is Monday, so it'll be Sunday, Saturday. Okay, wow, so Saturday, December 2026, December 23rd, 2023. So I just saw the S&P close with a consecutive week of eight for its 8th consecutive week of gains. I think tying the record for the number of gains since 10 years ago, maybe a decade ago. So let me try to think what else happened. I think something to do with inflation, maybe. Let's see. The personal consumption price index fell 0.1% in November. Okay. So I think that's a measure of inflation. Personal consumption price index is a measure of the prices for the personal consumption expenditures, which is a measure of consumer spending. The employee retention tax credit is a mess, so that's something I didn't really get into, but let's see. Today's headlines: WSJ 10 points, December 20. Yeah. Not too sure. Israel's economy is reeling from the conflict in Gaza as Palestinian workers are barred from entering the country, and Israelis are call for military duty. Austria stopped worrying about OPEC because recent cuts haven't led to sustained oil prices. Saturday. So what is the current state of the housing market as of the publishing date below? What is the outlook for the upcoming 2024 year? The office market had it hard. I think probably the property market, commercial real estate market. Okay, so I didn't really look at what the answer was here. So the current state of the commercial real estate market. So occupancy rates are, I remember, around 10%, and then they are predicted or estimated to be over 17% 2026 by CoStar. I don't know how accurate that is, but what it turns, right? I don't know how accurate that is, but long story short, the occupancy rates of commercial real estate properties are predicted or estimated to be higher, and also is already at a pretty high 10% rate. Maybe looking at historical rates could be helpful in this analysis, because I'm not too sure what the baseline is. But a lot of this is due to the fact that work from home trends have caused a lot of people to not come into the office or come into the office less, and that in itself is driving demand down for really spacious or luxurious office space, because there's just not that many people using it. And so I think a lot of the leases are expiring, maybe not a lot, but a majority or maybe a good portion of leases for commercial real estate are expiring in 2024. And I think these authors are predicting that not a lot of those leases will be released or re-signed. Landlords are facing increasing pressures due to the reduction of rent income, high interest rates, and a shifting work culture that is causing higher defaults. These landlords have the option of selling property at deeply discounted prices or giving it back to their creditors. Okay, so the Red Sea, right now, I believe the Houthi rebels, Yemen is, I think it's a rebel group in Yemen that's backed by the Iranian government, is attacking a lot of the carriers or shippers in the Red Sea, which is just a strip. I'm trying to think. I think it's the strip that connects the Mediterranean to the Mediterranean Sea to the Pacific Ocean. Could be wrong, but I'm almost certain that's it. So, yeah, Yemen rebels are attacking carriers that are traveling along that pipeline, which seems like it's a pretty important. It's actually an important, I guess, sort of, what do you call it? Shipping route. And so I think the US is going to launch some type of military campaign. That's what the article claims, to prevent these attacks from happening. This could lead to less economic / shipping activity and possible price increases due to rerouting. Today's headlines from the market. WSJ 10 points. It's on Saturday, December 23rd, 2023. Some of the top headlines from the market was that the S&P had closed its 8th consecutive week of gains. Also, the personal consumption's price index had dropped 0.1% in November. I forgot what the other one is, though. Not gonna lie. The employer retention tax credit is a mess. I have no idea what that is, though. Today's headlines, WSJ 10 points. Oh, shoot, okay, I'm not looking. So, on Sunday, December 23rd, I think the headlines were for so one of them was for OPEC, and the other was for the Israeli economy faltering because of the loss of Palestinian workers and also loss of workers from people who have joined the military. And then the second was, I think, something about OPEC, Wall Street not caring about oil prices, or about OPEC because recent production cuts haven't led to sustained oil prices. Okay. Okay, yeah, I'm gonna take a break from there. Let's see. Only 9 minutes is not too bad. I think I want to get started on these. So, how should one consider whether credit is more desirable? I think the idea behind whether or not credit is more desirable lies upon the fact that is whatever you're borrowing, or whatever you're borrowing, is that creating value in the sense that you're able to pay back your debts from the credit that you've received to make some type of investment. Yeah, that's kind of what I'm trying to say. Credit is desirable depending on whether the borrowed money is used productively enough to generate sufficient income to service or repay the debt. How can too little credit and debt be a bad thing? So, too little in credit and debt can be a bad thing because not having enough credit, which is buying power, and this credit relies on debt, which is just giving money away to people that don't have enough money but have maybe a good idea. In exchange, they'll pay you back at a later date plus some interest. This not having enough of either is pretty bad because it doesn't promote economic activity and doesn't really promote growth, as opposed to having more credit and more debt. So the basic idea is that with credit, you're able to fund people that don't have access to capital, but maybe have valuable ideas that are worth funding and can be valuable if actually implemented. If credit is tightening, or maybe there's just not enough credit around, then these people that have these great ideas won't have the funds or resources to turn those ideas into reality. So there is no credit being offered. Okay. What are the potential trade-offs with tight and loose lending standards? The potential trade-offs with tight and loose lending standards. So, as I mentioned before, with a tighter lending standard, then there's probably less money being lent out, because you would expect almost 100% certainty that you're getting your money back. And so you're really limiting the amount of people that you're able to lend out to. And because of that, people that may have great ideas but are not in a very strong financial condition, they're probably not going to be able to get funding for those ideas. And so with a tighter lending standard, it might stifle some innovation or value generating projects. Now, on the other hand, with loose lending standards, then you're really trying to lend to anyone, then you're really able to lend to a broader range of people. And then this comes with a lot of credit risk, in the sense that credit and default risk, I think. So with the default risk, you face, maybe they're the same thing, so I would think they're pretty similar. It just lies upon whether or not people will be able to pay you back. And with looser lending standards, then you might face a problem where you have higher losses on your debts, meaning that people can't pay them back. Tight lending standards restrict credit to people/businesses that are almost certain to pay debt back. When looking at the economy of a nation, what are the figures that Ray Dalio suggests would show a typical bad debt situation? Oh. So I think he was saying that if you have, let's say, 40% of your loans, your outstanding loans, not being able to be paid back, then that's maybe a typical bad debt situation. And let's say the total outstanding loans is about sorry. So he said that 40% of the bad loans are not 40% of bad loans are not able to be 40% of the value of bad loans cannot be paid back, and about 2% of all outstanding loans are I think it's around 20% of loans are considered to be bad loans, in the sense that 40% of those loans have loss or can be paid back. And then also the amount of total outstanding loans is around twice the amount of GDP. So then he says that you have a 16%. So 60% of your nation's GDP is Okay, sorry. So the 16%, the total amount of value or loss on loan values is around 16% of your entire nation's GDP. Yeah, it sounds pretty hard. How does Ray Dalio define the ideas of credit and debt? So credit is buying power, and then debts, I think, is the enabler of buying power. So credit is the giving of buying power. Debt is the exchange of buying power for a promise to pay it back. Okay. What does the downside risk of debt depend on?
Bless you.
Thanks. The downside risk of debts, I don't think I remember this. Downside risk of debts depends on maybe. Let's see. So, having a lot of the willingness and ability of high levels debt. Okay, so downside risk of having a significant amount of debt depends a lot on the willingness and the ability of policymakers to spread out the losses arising from bad debts. Okay. What affects the ability of policymakers to spread out the losses of bad debts through time or through the nation? Alright, so I think.
这俩人在这学习呢。
Yes, sir. Yes, sir.
我天，这个都再重新洗一遍了，你这是。
Are you recording?
Yeah.
哎，你那计算机没开呀、
I'm writing.
把这里头的东西也都给刻印一下啊，明天了。啊，
Okay, come.
看看这不要的都给刻印了，都给弄走。
这个不用了。
这不用了，这个。啊？没打开，
这个
先放这会儿，等明天了拿去就现在不行下去。哎呀，这真是，这一个这现在多少钱呢？这个
不知道。
你那多少钱呢？
500.
啊，500呢，那这个可能也不便宜，至少要200-300吧，哈。
Maybe, I don't know. Yeah.
When I first got my monitor, I was so confused that it didn't have speakers. I didn't realize monitors didn't have speakers.
No, they do. Some of them do.
But these don't, right?
Those don't.
Yeah.
This one does.
这都有 speaker 没有？
这有一个 speaker，这两个好像
Why
没有。
is the monitor so thick? Like, it doesn't do anything.
What?
Why are these monitors? I was
这会
actually,
有啊，这底
I
下
was
这个
actually really
这底下
surprised that
有呢，
monitors these days are still so wide and heavy and thick.
这底
Yeah,
下
I don't know.
有
Maybe we
插
can
的
take them out. We can open one up and see what's inside.
Like, if a screen for a laptop is more clear and thinner, why is this so giant?
This is pretty thin,
It's heavy. It's really heavy, and it doesn't even feel like the quality is as good.
It's a laptop.
Mm-hmm.
I feel like it looks better than a laptop, to be honest.
If you say so.
Yeah. Who knows? Who knows what I'm thinking? Damn. I can see blue lights in my shoot. So I think the effects of the policymakers, I think it really comes down, or Ray Dalio thinks it comes down to whether or not the policymakers have the debt is denominated in the local currency in which the policymaker has access to what the levers of a central bank, so whether or not they can control the interest rates on that currency, whether or not they can print currency. So, okay, number one is whether or not the policymaker whether or not the debt is denominated in a local currency versus a foreign currency for the nation. I think that's the biggest one. I forgot what the second one is. So let's see. Whether debt is denominated in the currency that they control, and whether policymakers have influence over how creditors and debtors behave with each other. Okay. What are the political implications? What are the political implications for debts? Political implications for debt. It's politically easier to allow easy credit and tight credit, favor looser lending standards over tight lending standards. Okay. How can we simply describe the idea of a cycle through borrowing money? Yeah, this one's an important one, but also a difficult one. So I think Ray Dalio painted the idea of a cycle through the process of borrowing money by saying, if you're borrowing money this one's a hard one. So if you're borrowing money, then to spend in the future. You're using money as buying power to spend on some project. And I think that project creates some economic opportunity or some value. And then you pay back that money, but then you borrow to increase the So maybe the idea comes with the fact that if you're borrowing money, you're creating a project, and you're probably paying other people to help you build your project. So they end up using their income, they get some income, but then they use that income to borrow, to use against some taking out more money for their own stuff. And so maybe that creates a cycle itself. Usually when I'm borrowing money, I'm buying something that I can't afford, which means spending more than I make. Think about it, I'm not just borrowing from my lender, but also borrowing from my future self. I'm choosing to spend money today that I don't have in exchange for spending less in the future so I can pay my debts back. Okay. The pattern of borrowing and spending more than I make, then having to spend less in the future quickly resembles a cycle. Okay, this one's hard. What is a simple relationship between spending and income? So as your income increases, your spending increases. Oh no. One person's spending is another person's income. Did not get that. Our economies whose growth is significantly supported by debt finance, building out investments, real estate, and infrastructure prone to large cyclical swings. Why or why not? So economies whose growth is significantly supported by debt finance, buildings of fixed investments, real estate, infrastructure, they are prone to large cyclical swings because the demand of all of these infrastructure projects and real estates is not infinite. And so when you have an economy that really depends on the production and development of these projects, once they're done, then pretty much the demand's satisfied. When you have a power plant, you don't need 20 different power plants within the same region. You really just need one, maybe a couple once they're done.
明天有雨，明天没雨，后天有雨。明天你们要不去DC 了，我就不做饭了；不去了，我就给你们整点卤面条。你们有可能去吗？
有可能。
行，去了晚上就不回来吃饭是吧？
I have no idea.
啊？
I have no idea.
啥意思 ？No idea 啊？不知道。
那么我肯定会去，I'll go。我明天去 DC。
去 DC 在家回来吃饭吗？
我能在那吃吗？
你跟Tony一块儿了。
不知道 Tony
有钱了
要吃。
你就
我没有钱。
你没钱你吃啥呀？
有人借钱吗？
我没有钱。
Yeah, that's right. So, okay. Alright, so going back to what I said earlier, these economies are pretty susceptible to large cyclical swings because these types of projects are usually a one and done type of deal, or maybe a few and done, in the sense that demand for all of these big projects is not infinite. And going back to the power plant example, a region doesn't really need 5-10 different power plants. It maybe only needs 1 or 2 in order to power the whole region. And so with an economy that really depends on the building and development of these projects, so the people that are actually building it, the contractors, the suppliers, these people are all being hired and creating some economic stimulation. But once the project is done, then it's difficult to find another project to get started on. And since the economy is really dependent on these really large projects, if there are no large projects, then the economy will probably likely suffer a little bit. And Ray Dalio mentioned that these types of economies where growth is really fueled by debt financed buildings of fixed investments and whatnot, those are usually common in emerging economies. What is a simple relationship between spending and income? So spending and income, one person's spending is another person's income, plus the government. When looking at the economy of a nation, one of the figures that Ray Dalio suggests was show a typical bad debt situation. So he's thinking that, okay, let's say typical bad debt situation is 40% of all of your bad loans are not payable. So 40% of the value of your bad loans cannot be recuperated, so it's a loss. And then 20% of all outstanding loans are those bad loans. So 20% of all of your loans outstanding in a country, 40% of them 40% of their value has been destroyed, or it's been gone, can't be paid back. So that means you have 8% of the total value of all outstanding loans can be paid back. And another thing, hypothetical scenario, is that the amount of debts, or the total outstanding value of your loans, is twice the amount of GDP. So that means in total there's a 60% value of outstanding loans that can be paid back when compared to the value of GDP. What are the political implications for debt? So the political implications for debt, there are some interesting things here in the sense that it's politically easier to have looser lending standards for companies or for people as it is to having tighter lending standards. And I think the reason is because usually looser lending standards promotes economic growth and promotes more, I guess, equality towards your constituents. And so politically, having more debt and credit is easier and maybe preferred by politicians to please their constituents. What does the downside risk of high levels of debt depend on? So I think the downside risk of high-level debts depends on whether or not the ability of the policymaker to be able to spread the loss on the value of outstanding loans across the entire country, so maybe across people and also across time. So 16% of GDP being loans that can't be paid back, that's a lot to handle in just 1 year. But as you spread the losses out, let's say maybe for 15 years, 16 years, then it just becomes 1% of GDP for the next 16 years. I'm not too sure how policymakers are able to do that. Maybe they raise or lower interest rates. I think Ray Dalio can maybe get into that a little bit deeper. How can we simply describe the idea of cycle through borrowing money? So with a cycle, with borrowing money, you're borrowing money from your future self. So pretty much the idea is that when you're borrowing money, you're receiving more today, you're increasing your buying power today in exchange for limiting your spending in the future, because you're going to have to pay back this money that you borrowed and also pay back interest. And so this may not be a great note, but eventually what Ray Dalio says is that the process of buying and receiving more today, so borrowing or taking on credit today, increasing our buying power, and spending less in the future quickly resembles a cycle. What affects the ability of policymakers to spread out the losses on bad debt through time or through the nation? So the ability of policymakers to spread out the losses on bad debts really lies upon whether or not the policymaker has control over the currency in which the debt is denominated, and also whether or not the policymaker has any influence over the relationship between the debtors and the creditors. Whether policymakers have influence over how creditors and debtors behave with each other. So that's still kind of confusing, though, to be honest, yeah. Why are emerging economies susceptible to large cyclical swings? So emerging economies are susceptible to large cyclical swings because of the fact that a lot of them have economies where they are primarily stimulated by these large debt finance projects. So when that happens, I described before, once these projects have been fulfilled, there is little demand left, and once that happens, the economy starts to tank a little bit until more demand is needed for other types of fixed capital infrastructure assets. What is a bubble in navigating big debt crises? I think the way Ray Dalio defined a bubble maybe a debt bubble. I guess maybe it was just bubble in general, is that the value of some type of asset is less than the intrinsic value of an asset is way lower than what people are willing to pay for it. A combination of unrealistic expectations and reckless lending results in a large amount of bad loans. Okay. Unrealistic expectations and reckless lending results in a large amount of bad loans. Ooh, it's kind of slow though. What is a classic warning sign of a bubble? This one I'm actually not 100% sure. Classic warning sign of a bubble. So what did I describe the bubble being before? I had described it as a combination of unrealistic expectations and loose lending standards resulting in bad loans. So maybe some classic warning signs of a bubble could be really high debt to income ratios. Oh, an increasing amount of money is borrowed to service pay or pay off existing debt, which compounds the borrower's indebtedness. Okay, that's actually pretty important. What type of behavior does lending have? So lending is the act of giving out money in exchange for interest and promise to pay it back at a later date. I'm not too sure exactly. Lending creates a self-reinforcing upward movement that eventually reverses to create a self-reinforcing downward movement. Okay, so what does that mean? I think this means that being able to lend I guess it has to do with the fact that as you're borrowing, more economic development is happening, so others are also borrowing, so this kind of pushes your economy upwards. But when people are not able to service their debts, pay back their debts, then other people won't be able to pay back their debts, then other people won't be able to pay back their debts, and it becomes a self-reinforcing downward movement. Our economies whose growth is significantly supported by debt financing, building of investments, real estate infrastructure prone to large cyclical swings. Why not? Yes, they are. And I think the reason was, I described before, is that once these projects end up being finished, then there is no more demand really for these projects, these large big projects. And so for economies who's largely stimulated by the development of these projects, when there is no more demand, then the economies tend to falter a little bit. Okay. What is a simple explanation to why lending has a self-reinforcing upward movement? What happens at the top of the cycle? Ooh, yeah, this is a good one. So lending has a self-reinforcing upward movement due to the fact that so think what I said before was that people who lend, or I guess lending itself, generates economic activity, and then that economic activity empowers other people. One person's spending is another person's income. They might tend to borrow too. They might start borrowing as well. And so this process kind of repeats itself and pushes the amount of debts, the amount of lending upwards. And then at the top of the cycle, I think logically that's when maybe a bubble starts to form. And so the banking and lending institutions have overextended themselves. And people that are lending have also may not be in the best credit condition. And so with a slight decrease in maybe consumer spending or economic activity, that kind of causes a chain effect, and allowing these people that have borrowed and overextended themselves to default on their loans, which causes other people who depend on maybe some of the businesses that this person has recently defaulted on to then default themselves too. Eventually, the borrower left spending income above the consistent growth of the economy. More lending is done based on the expectation that this growth will continue forever. So I guess this is the top of the cycle. Eventually, the borrowing lifts spending and income above the consistent growth of the economy, and more lending is done based on the expectation that this growth will continue forever. That's pretty hard. So the amount of debts, the amount of lending is growing faster than the actual growth rate of the economy. So more money is being lent out compared to how fast the economy is growing. Interesting. What is a simple relationship between spending and income? One person's spending is another person's income, and the government's income. What are the political implications of debt? So navigating big debt crises, the political implications of debts are that debt is usually politically easier to allow debt is politically easier to allow it is politically easier to allow looser lending standards compared to tighter lending standards. What is a bubble? A bubble is the combination of generally it's the idea that the asset that you're paying, I forgot what I wrote for this definition. My brain's starting to falter a little bit, but I think this had to do with combination of two different factors. One of them is the high level of bad loans. I forgot what this combination of unrealistic expectations and reckless lending resulting combination of unrealistic expectations and reckless lending results in a large amount of bad loans. Okay. Classic warning signs of a bubble. classic warning sign of a bubble is when people are borrowing or servicing their debts by borrowing more. So what that means is that people are borrowing in order to pay back the debt they had previously borrowed. Okay. Alright. That's pretty good. I think I'm going to go shower now. It's been an hour or so. Yeah, 55 minutes. That was a good flashcard review sesh. So, yeah, my eyes are getting kind of sleepy, so good night and goodbye.